I hate the question, but it's easy. Long term, I see the Bitcoin price higher, much higher. Bitcoin's a better version of gold. It's not even close. They're like, oh, pay off your house, pay off your house, pay off your house. No, you're borrowing at a rate that's lower than the expansion of the money supply. You're being paid to borrow money, basically. The only way that doesn't work is if the expansion of the money supply slows and that debasement becomes less than, whatever your borrowing rate is. Not likely to happen in the near future. And it's nation state resistant. That's how big it is. And that's how strong it is. So just keep the first principles. Don't worry about the price activity. It is going to be volatile. I expect the volatility. I actually welcome it.
Mr. James Lavish, thank you so much for coming back on the show and, of course, always being a playable character in a sea of non-playable characters. Thank you, sir.
It's awesome to be here, Brandon. Thank you for having me. Fun day in the market, per usual.
You just tweeted out, I think it was earlier today, actually, I remember yesterday, about one of the biggest catalysts this year being banks lending against Bitcoin, or helping people do that. So I'd love for you to unpack this a little bit, and because I think it's so important. Like, you just touched on all these things that people, we've all been waiting on this for a year, 2 years, a couple years, like, with a choke point or the regulations going away, the FASB accounting rules changing. It feels like the goalposts just keep moving, right? And like, everyone's just like, okay, wait, if people knew what we knew, this thing would be in the millions at this point. So like, do we just need big prints? Do we just need Larry's book to come to fruition here and that's the only way Bitcoin price is going to keep exponentially moving upward. So I'd love for you to touch on, SOB 121 and just the impact that banks, with affecting sell pressure and what's going to happen here with banks lending against Bitcoin. So I'd love for you to unpack that a little bit.
Yeah. So first things first, Bitcoin does move off of liquidity. We know that. And like I said, it's because it's being treated like a risk asset. So as liquidity expands, Bitcoin follows. It lags by about 3 months, somewhere around 2 or 3 months. And so we saw liquidity drained at the end of last year. And so now it's coming back up, but Bitcoin's it's still lagging. It still hasn't, if you chart them against each other, it still hasn't reached that bottoming out on liquidity. When it, after it does, it will start to rise again. Maybe it has gotten pretty close here in the last couple of days. But so that is important for there to be liquidity. But let's just face it, there's no long-term liquidity will go higher. The money supply will expand. That's just reality. There's just no way in our debt-based system that we could sustain this without having a debasement of the currency. That's just the truth. So we will still see the expansion of money supply and Bitcoin price going up, alongside that. So that's just the reality. But looking at that liquidity and what we need for Bitcoin to kind of reverse course here, and all of those other catalysts that you talked about, and I've talked about, the tailwinds. Well, one of the biggest one, like you just mentioned, is the full repeal of SAB 121. So this is an accounting bulletin that the SEC put out, and it was kind of it was a very strict bulletin advising banks and financial companies on how to treat Bitcoin, and it basically warded them off from holding it as an asset at all, and basically said it would be treated as a liability, and so really difficult for them to do anything with it, and so they just avoided it. That's why you had so much choke point 2.0, because banks and financial companies, institutions just didn't want to deal with it. That's all been changed. The SEC. So last year, the SAB 121 was repealed by Congress. It was passed to be repealed because it didn't make any sense. It was kind of like an end zone run by the SEC, where it was oversight by enforcement, and that was just, it's just wrong. And so the legislators were like, this is our job to come up with the laws and the rules. It's not your job as the SEC to just decide what you want to do and do an end zone run. So no, we're repealing it. And you got out of bounds, Gensler. And so it went to the president's desk. And as promised, he vetoed that. He vetoed it because this last administration, the Biden administration, was incredibly antagonistic to the crypto and Bitcoin ecosystem and community. They planted their flag and opposed them. And I don't know if it was because of the noise coming out of Elizabeth Warren's camp or her anti-crypto army or whatever it was, whether she's in the pocket of the big bankers that they didn't want Bitcoin because they know that it can be disruptive to their business. Whatever it was, they weren't ready for it. They went along with it, and he vetoed that repeal. We'll enter this year, and you have Trump, a new administration that is clearly very Bitcoin friendly and crypto friendly. And suddenly the SEC, they just strike the bulletin, abandon it, and now it's no longer in force. And so now the banks, this is the big deal, is the banks can actually hold Bitcoin as an asset and build products around it. They can build lending products. They can build collateralized products. They can do things that they couldn't do before. And it's a really big deal that if you have Bitcoin and you can work with your bank, whether it's JP Morgan or, or if it's Wells Fargo or Chase or Citibank or whatever it is, you can work with them to use your Bitcoin as collateral for things, or they can create collateralized products or lending products for you. It's going to be a big deal, really big deal. Because I know there are a lot of Bitcoiners out there who sit on a massive amount of Bitcoin that they don't want to sell, but they want to somehow monetize to use in their favor. They don't want to pay the taxes on it. They don't want to get rid of it, but they want to find a way to use it. And benefit from it. And that's going to be, I think that's going to be a huge deal. And eventually it'll trickle down into things like, mortgages and loans against them and using Bitcoin in just, residential mortgages for collateral. So you don't have to put up your 20%. You can put up 10% cash and 10% Bitcoin or something like that. And it's going to be, I think this is going to be a big deal for both consumers, but really a big deal for the banks. They're going to be rushing to get these products out later this year as they get their head around and get their teams around this. And so I think it's going to be a really big deal. And so what does that mean? Well, it just continues to march down that institutional adoption road, where you have institutions are embracing Bitcoin in particular, and they're going to be using it to build products and sell products to people. Is it in the best interest of Bitcoiners to go and have banks in control of this stuff? No. But does it help institutional adoption? Yes. And if that's the case, then ultimately it's good for Bitcoin adoption. It's just a philosophy of whether or not you want institutions involved. It doesn't matter. They're getting involved. And that's kind of it's a big deal for Bitcoin price, in my opinion. And that will affect it over the course of this year and the next year. Even though it's down here under 80,000 today, I actually see this as a huge opportunity for my fund to go and get exposure in places that will give me more upside in this Bitcoin ecosystem because of the price being depressed here. I think it's a little bit of a gift for us. So, but again, I'm a long-term investor. I take a very long-term view on this, and I'm optimistic about the future of it.
Yeah, well, that's so well said. I feel the exact same way. I would love for you. I think it's a good segue. You made me think of Tether, stablecoins, and obviously Lutnick. Like these guys, clearly a lot of the cabinet owns Bitcoin. I mean, dang near all of them, I think. And so, number one, the beauty of people always, well, you guys are pumping your own bags. It's like, well, you're free to join the network, right? Like that's the beauty of Bitcoin, and it's not a zero-sum game like fiat. And that's what the true beauty of Bitcoin, that everyone can jump on that trade. Everyone can throw a few dollars and invest and save in Bitcoin. So that's the beauty of it, number one. But I would love for you to get your thoughts on Tether, stablecoins, extending dollar dominance possibly. So your thoughts on that, but also it just makes me think of BRICS and getting your thoughts on that. And I can't help it. It seems, is there any credence to these guys setting up some type of, like, are we in a Bretton Woods right right now in a way? Like, will we look back in 10 or 20 years and look back now and be like, wow, we were in a monetary transition where these guys were setting things up against gold, right? You have gold and silver making moves, and you have Bitcoin now coming into the foray. It feels a lot like where I'm going with this. It feels a lot like Blockbuster, the Innovator's Dilemma, where you had Blockbuster and Netflix, and Blockbuster or Kodak, those guys chose not to innovate and fire themselves and improve their companies because they're like, you know what, my old technology, the dollar, is still going to be good. It's still going to be good. But now you have these guys who seemingly look like they're very forward thinking in the sense of, are they playing 5D chess where they are positioning with stable coins, Bitcoin, gold to revalue the dollar and extend the dominance of the dollar in the American empire, whether we all like it or not? Does it feel like that? Because to me, from the outside, very outside, it kind of looks that way.
Yeah. I mean, I think you have to simplify it to why would they want USD? Why would they want, stable coins, Tether and USDC? Like, why do they want these? Why would they want regulation around them? It's pretty simple. Number one, this administration has already said they're not seeking to have a CBDC. The central bank digital currency would be, that's just evil. Having control down to the point of sale on every single thing you do is just, that's a violation of freedom beyond. So that's just the overreaching control to the nth degree. So, but they have said that they would like stablecoin legislation. They want to get, clarity around stablecoins. Why do they want that? Well, for the viewers who don't realize this, Tether is currently, I think, the 6th largest buyer of U.S. Treasuries in the world. So wow, it's crazy. So why would it be doing that? Well, it's doing that because it wants to peg itself to the U.S. dollar, and so. And again, why would it do that? Because people around the world want access to dollars. And one of the ways they can get access to dollars is through stablecoins. They can get on these platforms and buy the stablecoin on that platform. Another reason for it is that when you're on those platforms, you're looking for a little bit of yield with your idle cash. And how do you do that? Well, you buy your stable coin with it, and that's what you're looking for, to have the liquidity that is pegged to the dollar rather than whatever your currency is that you can be buying Bitcoin with or the other cryptocurrencies with. So really important for people to understand that dollar dominance is predicated on the U.S. retaining retaining the U.S. Treasury as a global reserve asset. So people need to be buying treasuries. How do they do that? Well, if they're buying stable coins that are pegged to the dollar, they're going to be buying T-bills and treasuries. And so they know this. So that strengthens the position of the Treasury, that you continue to have these stable coins buying these treasuries, which stabilizes the dollar. Because people aren't trying to get away from treasuries, which means that they don't need dollars. Well, the world needs dollars. And the easiest way to do that is to have treasuries, because you can turn the treasuries into dollars. Now you go to the BRICS. Well, the BRICS don't want to own treasuries because they saw what happened to Russia. We made a monumental, catastrophic mistake strategically when Biden shut off Russia from the SWIFT network, so they couldn't use the settlement network. And then for cross-border transactions. And then they also seized their treasuries. I mean, it was just so stupid. I just can't wrap my head around it, that they just signaled to the world that if you're not a great ally of the U.S., we might just seize your assets from you, the ones that we need you to buy. You morons. Literally, it's so stupid that they told the world that, hey, we might just shut these off. Oh, by the way, we still need you to buy them, though. I mean, it's just so dumb. And so we've got the BRICS countries, Brazil, Russia, India, China, and South Africa saying, well, I'm not sure we want to buy treasuries. I mean, they just might seize them from us. That's, So they're looking for ways to transact cross-border without the U.S. dollar. They're not delusional enough to think that they're just going to create a new currency, a BRICS currency. That's not going to happen. But they're looking for ways to settle cross-border transactions without having to use dollars. Again, why? Because they don't want to have to use treasuries. They don't want to have to hold treasuries. And they don't want to hold a U.S. dollar on their balance sheet that's debasing so rapidly. They know it's debasing 7 to 8% per year. That's what the real inflation rate is, whatever the expansion of the money supply is. And the dollar is expanding by 7 to 8% a year. And they know that. They don't want to hold dollars. They might hold treasuries because that stems the flow, at least. It may not be a real rate of return, but it's not a massive bleed out like 7 or 8%. So that's the issue now. And so having stable coins helps because it helps, it helps broaden the reach of U.S. treasuries around the world for people to buy on these exchanges. And that's a big deal. And they need that. And that strengthens the treasury and strengthens the U.S. dollar.
Can we have, so I was talking to George, Bodine the other day, and then it's obviously like in financial YouTube for a while now. I mean, this has been, I don't know, 5-10 years. It's been, the buy, borrow, die. And that's, I think it's the Hugo Stennis trade. Like there's all kinds of different ways to kind of look at this, of borrowing. Sailors doing it now, right? There's all these different people have talked about it. Now people are playing it out in different ways. Can we have this trade, like can this extending of dollar dominance happen? Can Bitcoin keep mooning basically? And will we have this dollar dominance? Because if you're Howard Lutnick, if you're this guy who's sitting there with all these assets and you're living in the Hamptons, you kind of love this trade, right? Like you kind of love having these two currencies where you can play off each other. I mean, I guess it's like the yen carry trade in a way. Like you love like being able to save that hard asset and then lend against with SOB 121 going away and things like that. You love the ability to borrow the cheap currency and then save in the hard asset. It feels like this is going to be the trade for a while, like as far as the eye can see almost.
Yeah, I mean, it's been the trade, right? Borrow cheap and buy the asset that appreciates significantly. That's where, guys like Dave Ramsey get it so wrong. They're like, oh, pay off your house, pay off your house, pay off your house. No, you're borrowing at a rate that's lower than the expansion of the money supply. You're being paid to borrow money, basically. That's what they're not seeing, but yeah, it's going to continue for as long as I can see. There's just no way out of this from what I can tell. The only way that doesn't work is if the expansion of the money supply slows and that debasement becomes less than, whatever your borrowing rate is. Not likely to happen in the near future, So, I maintain borrowing across the board. Doesn't mean I don't have assets. I've got, plenty, whether they're liquid or illiquid, that I don't, I didn't pay off my house because why would I pay off my house? That's a stupid trade. At this point in history of our fiat experiment, it's stupid. Again, I'm calling a lot of people stupid today. You can tell what kind of mood I'm in. But
it's a Monday. It's a Monday, folks.
I mean, I just think it's erroneous. I don't think it's the wisest thing to do. As long as you have cash flow that you can manage that borrowing. Now, this is where we get into the problem of the U.S. Treasury. They do not have the cash flow to manage the amount of borrowing they're doing, which is why Doge is trying to reel in that spending because it's out of control. And so they know that they've got to reel that in. Will we get to a budget surplus? I kind of got into a debate with Pomp at his own conference last week in New York about this, and the answer is I don't think it's likely. He thinks that I'm underestimating it. I think that he's overestimating it. I just don't think it's likely that we get to a surplus, which means that the borrowing is going to continue, which means the debasement is going to have to continue because there's no way to manage this debt in an environment where the currency is appreciating in value, because you're going to be paying back debt with a dollar that's worth more. You don't want to do that. So you need
it's deflation in an inflationary system, right? Yeah. Like that doesn't work.
So AI and all that's problematic if it starts pulling GDP down. But the other side of that equation is, they're looking to lower taxes too. So the tax income is going to go down. The spending is going down. The hope is that the taxes go down across the board enough that it stimulates the economy to get GDP to go higher in real terms, along with the expansion of the money supply to get higher in nominal terms. And then we can get closer to a budget, a balanced budget. So, but that goes to the point of as long as you're not over your ski tips on your borrowing, that is the right play financially, mathematically. Borrow in the currency that's debasing quickly and use that to buy hard assets that are appreciating against it.
Yeah. Like you said, managing those debt levels. And that's what, like, the emotions are unfortunately what get to a lot of human beings, and they're unable to manage those debt levels, and they stay too emotional about it. And that's what's very tough for them. What do you, so I want to touch on the bit bonds here. This is starting to become a thing a little bit. It feels like you're talking about growing and expanding what we're doing. And I was thinking even on a local level. I mean, like, I was talking to some people in my local town. I'm like, man, when has there ever been a time in life where you could literally basically have a private placement? You're raising money, just like the fund. I mean, you guys do this. You're raising money. You can have people across the world paying you, in essence, basically giving you money to fund the development of your city, your local municipality. I mean, we've never seen anything like this. And it's like people just we're so early from what's going on here. But my question is, again, this outgrowing thing, like you said, we're cutting, tax income is going to be going down. Bit bonds, like we have these different things that these guys, again, they seemingly are going to try some different things here, some revolutionary, when it comes to the government, at least revolutionary things where we're changing what we're doing and how we're looking at things, and to increase revenue and offset maybe some of the cuts or the tax revenue going down. So I would love for you to, touch on the bit bonds, your thoughts on that and what this might entail going forward.
Yeah. I mean, they're bonds being issued by the government that are backed by Bitcoin are a long way off, in my opinion. Maybe I'm wrong, but I think that's a long way off. I could see it more locally, maybe, but you'd have to a municipality that actually has Bitcoin in the balance sheet in order to do it. They have to have their own strategic reserve. We haven't seen any states do it yet. Texas may. Yep. I mean, I think that they're they're as likely as anybody. Texas may do it. They passed the Senate, and I think it's got to pass Congress. And Patrick, the lieutenant governor, I think is heavily in favor of it. So this is it's a possibility. I think it's more likely that you'll see Bitcoin bonds where it's more on the retail level. I mean, we have seen, and I talked to Andrew Hone about this last week. I guess I was in New York 2 weeks ago. Last week I was in Wyoming. Losing track here, Brandon. So I talked to him last week about battery finance and how they're using Bitcoin-backed loans in commercial real estate space. It's like but I could see it happening in the retail level soon, where you have, I've seen some companies that are working on this, where you have Bitcoin-backed mortgages and stuff like that, and that would make sense to me. To have that, like we were talking about earlier. I think it's still nascent. It's very early stages, because Bitcoin is so volatile, still so volatile. It's going to be a small portion of the lending products at this point, but as volatility kind of calms down, I think that market will grow quite a bit.
What do you think in terms of just, so we've obviously been kind of running the gamut here of all these headwinds and tailwinds, and where do you see your predictions for, or just what you see coming out? I can't stand saying that, but just like, where do you see Bitcoin price? And again, it's hard to measure in USD price of what Bitcoin is, right? So it's like, yeah, it's like you're caveating all these things, unfortunately, because there's so much nuance to this. And I did a whole episode.
It's easy. It's easy. I hate the question, but it's easy. Long term, I see the Bitcoin price higher, much higher. And that's because of the debasement of the currency, every single currency that's being measured against it. The only one that isn't debasing as rapidly as gold, but Look, Bitcoin's a better version of gold. It's not even close. It's such a better version of gold. I know people like to wear gold and they like to, have it in jewelry. And there are definitely use cases for it, and there's utility for it. Clearly, obviously. But there's different utility for Bitcoin. And I think that there as a base layer, there are going to be a lot of things built on Bitcoin, second, third layer. And they're going to be important to the financial system. And so that having a trustless system like this is it's revolutionary. It's going to change the financial world. And if you just keep it to first principles, this is a network that is backed by 75 terawatt hours of energy, which is the equivalent of 20 full-time nuclear reactors running full-time. It's completely decentralized, and it is a fortress of network. It's a digital fortress of network power, and it's nation state resistant. That's how big it is, and that's how strong it is. So just keep the first principles. Don't worry about the price activity. It is going to be volatile. I expect the volatility. I actually welcome it. Why do I welcome it? Well, I'm an institutional professional investor. My hedge fund takes advantages of these drawdowns. We do things that enhance the returns, and we have drawdowns like this because we have the ability to do that. And you do too. If you just leave a little bit of extra powder and you're not always all in and you've got some powder, and you can take advantage of these drawdowns. And that's the volatility advantage of Bitcoin. So, and the fact that it's rising over the long period of time, that gives you these opportunities to take advantage of price swings. And I think it's a good thing. Am I nervous? Nope. Am I optimistic? Absolutely. Super optimistic about especially some of the opportunities we're seeing for the fund. Some of the private opportunities we're seeing for the fund that, other investors just don't get access to because we're involved in this space. And that's an advantage. And being involved in this space is a really big deal. And you got a lot of people on the outside that have no idea what's going on here. We're so early. I was talking to a colleague of mine who is in mainstream, and he's a mainstream investor this morning. And
if you're liking this interview, but you're just wondering, you know what, Brandon, this is amazing stuff. And I get you have these guests on and they're talking about how orange pilling the world is so great and how Bitcoin is going to take over the world. How in the world do I educate my family and friends? How do I get people to understand what most people just don't care about, quite honestly? Bitcoin trading cards is the way to do that. When you open up these cards, you see the foil cards, you see the chase, you see the glossy cards, young, old, boy, girl, man, woman, it doesn't matter. People love these cards. It's awesome because they're super valuable, by the way. Amazing little side note. However, it Trojan horses them into the most important thing of the day. It's not politics. It's not all the things that we fight about. It's changing the money, fix the world. Bitcoin trading cards is the best way that we have going in order to do that, no matter who you are. You're gonna love them. Playable Characters 10 for 10% off at checkout. Playable Characters 10 off at checkout. btc-tc.com. You're going to absolutely love these things. Now back to the show.
Contention is that everything's priced in. All the good news is priced in. That Bitcoin's at its peak. That's it. There's nowhere to go from here. And I will not call his name, but I just think I appreciate the viewpoint. I just disagree. I think that there's massive amount of upside here, massive amount of runway and adoption ahead of us that we have barely seen any of, and I'm super excited about it.
It does feel like there's just this. It feels like there's almost like this 800-pound gorilla in the room, like this elephant in the room that it's right there, and like no one notices, almost like, right? Like it just feels like there's the global hash race. Like America just jumped. I mean, I didn't have that on my bingo card. Like America would be the first couple countries to adopt it. That would be smaller countries and all a bunch of smaller countries, and just kind of, so it just feels like there's so much there. Like is Russia going to jump in at some point? Is China? Like what happens? Is it, so I couldn't agree more. It is wild. It feels like there's the global hash race hasn't even started yet. And we're just at the beginning, the early innings of that. what do you think when, there's obviously been a bunch of, the altcoin stuff and people raging about that, and, the Bitcoiners, righteous indignation, rightfully so. And really kind of letting the administration have it, stuff like that. What do I had two questions for you about just, people talking about, because you get this a lot right now, like Bitcoin have a fair distribution, and, then the people saying like, oh, people are, you guys do, it's totally against the ethos. You guys were like, oh, we're against the government. It's going to take down the government for 16 years. And now all of a sudden you're like, yay, government, like, what do you, when you have people like talking like that and seeing that, and people asking you questions, what are you telling them about the fair distribution of Bitcoin, and people saying, oh, like, we can't win, right? Like, we're against government, and then we're in government. Trojan horse has to get into government inside the walls first. And now we're there. And now it's like, well, now you guys are in bed with the government. So it's like, you can't win either way.
I mean, look, Bitcoin is an open market. It's a free market. We've been talking about it for years and years and years and years and years and years and years. I've been talking about it for years, and I feel like I got in late, but it's an open free market. There's no entity that is determining the price. I mean, you can buy and sell right here. You could have bought and sold 50% lower than here, 80% lower than here. It's and it will continue to happen. Coins will be redistributed, and it's because it's a completely decentralized system. It's decentralized. There's nobody in control of it. There's nobody that's just going to dump 1 million coins on here, or 2 million coins on here, that you don't know about. They're not just going to create more. That's the point. It can't just be diluted. We know what the supply is. You can see it. And so I'm not worried about that. As far as the government being involved, well, they're not really involved, are they? I mean, they're just trying to, right now, all we want is a little bit of clarity on regulation and get some, get some of this choke point 2.0 stuff out of the way. That's really important for us. So that's good. And then do we care about the institutions being involved? Whether you care or not, it was always bound to happen. It's always bound to happen that the institutions are going to be in here buying. But remember, I worked for one of these institutions. I've worked for many of these institutions over my career. They're managing money for people. It's not just for themselves. I was at a $5 billion hedge fund. That wasn't my money. That was thousands of investors' money. It wasn't. I didn't have $5 billion, but we were managing the money for them. Yeah, we got fees for doing that, but it's their money. And so the CalPERS and the Texas teachers and, the Wisconsin Fireman Fund, I mean, they're managing money for pensions for people. And so if they have Bitcoin and it helps their pension, that means that the people that were working for that entity for all those years benefit from that. They get their pension, and so, or the endowments will be able to expand, hopefully they'll expand in the right way. We won't go into that with, the big schools, the big universities right now, but hopefully it'll help them and it'll help the, expansion the right way. And so it's not a bad thing for institutions to be in there. When you hear about BlackRock buying, BlackRock is not buying for themselves. They have an ETF that individuals, IRAs, and some hedge funds and some pension funds and some endowments are buying. When BlackRock's out there buying Bitcoin to put it in the ETF, it's to manage that underlying value that they're supposed to match for the assets under management of the customers that have bought the ETF. And then when they put it in their model portfolios, that's just a model portfolio for all of these RIAs and individual investment managers and portfolio managers to use as a template to have exposure to the market. And in there, if IBIT is in there, well, that's one thing that they're going to buy, but it's not BlackRock buying it. It's BlackRock, portfolios buying it, which again are for the people who are buying those portfolios. So really big deal for and distinction and clarity to make there. And, do they control all of that capital? Yeah, they do. They control billions and billions and billions of dollars, and some of them trillions of dollars. but those are spread amongst many portfolio managers, many different portfolios and many funds. And they're managing those to make money for their underlying customers.
Last time you were on the show, I think was a year ago, or almost a year ago, and a lot's happened. Obviously, president's been shot, new administration, ETFs are in full effect, full swing. BRICS is ramped up, treasury yields are up, and now they're crashing again. And now we have the SBR, but everything's crashing. Bitcoin's crashing, and I thought we were all told that Bitcoin is going to rip. This was great for Bitcoin and the price of Bitcoin, the U.S. dollar price. What the hell is going on in the markets right now?
Well, to put it plainly, markets hate uncertainty, right? And right now, there's a lot of uncertainty in the market. We have uncertainty around the economy, about jobs, about how many jobs we've lost in Washington, how that's going to affect the economy because we had such strong fiscal spending for so long coming out of the last administration. And then this administration is trying to be fiscally, responsible by cutting away the fat, cutting away the improprieties, cutting away the fraud. And so it's costly. It's costing jobs. So if you look at the markets, as we're talking, the NASDAQ is down 4%. I've already, this whole podcast was kind of put on hold for a little while I was working in my hedge fund and being focused on the things that are going on there. So what's happening? Well, the general market, obviously, it got a little bit ahead of itself. You had a lot of Trump enthusiasm, which I share in, and I think that the market's not wrong about, but it has gotten ahead of itself, meaning that all of the stocks, kind of the valuations got ahead of themselves because of enthusiasm around the new administration. Why is there enthusiasm? Because there's going to be regulatory clarity, lower regulations on smaller companies, probably tax breaks. Trump is trying to get the price of oil down, which means that the inflation of producer prices is lowered, meaning that companies will have better margins without having to squeeze the customers as much. And so that's all positive. And so the market kind of got ahead of itself. And then, as we come into this year, coming into this quarter, the Fed stopped lowering rates. They said that they've done enough. They're ready to just wait and see what happens. And so now you've got Fed funds stuck at 4.5%. Market doesn't love that. And that the market doesn't love it because when he started lowering rates back in the fall, it kind of felt a little bit too early and a little bit too fast. Mm-hmm. And so what happened? Well, the 10-year yield started going up. So Powell lowered rates by a full percent, and the 10-year yield rose by a full percent. And so that was a huge indication that the market was worried about a flare-up of more inflation, and or that they're worried that the government's going to have to continue issuing so many bonds on the long end of the curve that the bond vigilantes, as they're known, bond investors, were looking for a higher yield in order to be compensated for that duration risk, which is the possibility of having massive amounts of bonds issued on the longer end of the curve. So all of that happened. And then we come into this year, and ever since, that last month and going into this month, we've got this rollover in the market, and risk assets are being sold off. And that's because the Fed has said, we're staying strong. We don't see any reason to lower rates any further. Yet you're getting some weak economic numbers, and you're getting weak job numbers, and you're getting all these reports out of the government from Elon and Trump about fraud that's going on in the government, about ridiculous spending that's going on in the government, and about how they're just going to have to lay off a whole bunch of people, which they've already done, and they're going to continue to do. If you bring up the debt clock, you can see on there how much fat so far they've cut, which totals over $100 billion last time I looked, and I think it's rising pretty quickly. Although it's going to hit a spot here where it's not rising too much from that. So it's at 185 billion. I think it's going to top out somewhere around 200 or 300 billion for a little while here is my guess. I don't see how they can get more than $500 billion out of this, out of the government without really uncovering or slashing massive, programs or agencies, whether or not the Department of Education, I mean, there's fat that's being cut, but just how much, So that all gets to the point of uncertainty, which is you've got all the uncertainty of the economy, and then you layer on top of that, you've got the uncertainty of tariffs. So Trump is, he's been wielding a big sword about tariffs on China, Mexico, Canada, and he's saying, look, you guys tariff us, we're going to tariff you. Same thing with Europe. You guys tariff us, we're going to tariff you. And the reality is that, our tariffs are not going to be as if they tariff us, it's not going to be as painful as if we tariff them, right? We're a net importer. So the reality is, though, that the market is trying to figure out just how painful that's going to be, whether we're in a situation where inflation is stuck and we have an economy that's rolling over, and we're now going to have stagflation because of rise in prices of goods because of tariffs. Remains to be seen exactly what will happen to the price of goods with tariffs, but there's uncertainty around that. And so you've got the NASDAQ is off today, not to, it's just one of these days, and you can watch this from months from now and it'll still be useful to understand that the market sold off hard here. And so, the question is, what is going on now with the Bitcoin market in particular, which is what a lot of our followers want to know. And especially because, as you said, Brandon, last week, we had a massive announcement, a really big catalyst for Bitcoin in particular. And that was the announcement of the establishment of the Bitcoin Reserve, and that, strategic reserve at the government level. It's a big deal, but the market didn't really love it. We can get into that in a minute, but that's kind of just a big setup of kind of where we are and why we've had a rollover in Bitcoin, why we've had a rollover in tech stocks and the S&P, and the market is kind of backing off here a little bit.
Is it I don't even know how to say it. Is it a controlled demolition in a way? Is this something that they are trying to follow through on campaign promises and actually get out waste from the government? But at the same time, like, hey, we know we're going to have to juice this economy at some point. While at the same time, I would love for your thought on just the tariffs in general. Like, the tariffs not. Is it hard on our economy because we are the world reserve, like the Triffin dilemma, and that's why it is hard, like you said, when we're a net exporter? Is that, or a net importer? Is that why it makes it difficult and kind of really riles markets? Is that the right way to look at it?
That's a good question. All right, so let's unpack this. We know that Trump wants to please Wall Street in the end. He loves looking at the stock market, pointing to the stock market and saying, look at the stock market. The economy's doing great. The economy loves me. And I'm making people rich. It's kind of his benchmark. We know that from his first term. This is a different moment, though. And this moment is we were coming into the end of this year. And you heard Trump hammer the Fed over and over and over about, you need to lower rates, you need to lower rates, you need to lower rates. Well, the Fed did lower rates. And what happened? Well, the rates went higher on the 10-year, which is really the benchmark. That's the one that he needs lower. He wants the rates lower so there's more borrowing. So it's cheaper for people, consumers, to borrow money to buy large things like cars and homes. But that's all keyed off the 10-year. It's not keyed off of Fed funds. So he can hammer the Fed as much as he wants, but that's not going to matter. The Fed's not going to move until they have to. And Powell said it recently. He said he's not going to move rates until there's a reason to, and the stock market is sells off to a level that it warrants it. We're a financialized country, so our economy is very financialized. So it does matter where the stock market is. It's not just Wall Street that's getting rich off of this. It matters where the stock market is because of the financialization of our economy. And so he's not going to do it until the market tells him to. Well, if you think it's gamesmanship and you think that Trump is actually, he's playing the market in order to get what he wants out of the Fed, that could be true. Holding strong on tariffs, knowing that the market's selling off because of it, holding strong on the the cutting in the government, the Doge committee, and making sure that they're cutting as much as they can, knowing that that's lowering fiscal spending, and that fiscal dominance that we saw over the course of the last 2 years with the last administration was inflationary, and it was painful. So Trump knows that, and he knows that if he can stop that senseless spending, senseless borrowing, then that's good. And he said he's willing to, the market's going to need to it's going to have a period of transition here. I think that Bessent said that, our new Treasury Secretary said, look, we're going to have a period of transition here where the market's got to digest this new reality. And so the reality there is that, well, that could cause the market to sell off. And if it does, the game theory is that, well, Powell's going to blink and he's going to lower rates and he's going to get, and the 10-year is going to come down in the face of everything, because it looks like we're rolling into a recession. If that's, if it goes down hard enough, and if we get bad enough economic numbers, and then the Fed will lower rates, the rates will come down, and it'll be good for both Wall Street and Main Street, because Wall Street cares about Fed funds mostly, and Main Street cares about how much it costs to borrow, against a car or a house. Like, how much is my mortgage going to be? How much is my auto loan going to be? And that's kind of, it's keyed off the prime rate, but the prime rate is going to keyed off the 10-year. So, this is just reality. It does matter where Fed funds is for things like short-term T-bills and money markets. But, again, that's kind of a Wall Street thing. So, we have a lot of uncertainty, and that is, the question is whether or not the Fed blinks anytime soon, or whether or not these interest rates come down enough that it helps ease that pressure.
So there's all kinds of talk, obviously, because of Doge, and Ron Paul is in the news, and Elon, and it's like, audit the Fed, we're auditing Fort Knox. Like there's all kinds, like you said, uncertainty. This whole thing is just uncertain. Like, no one knows what's going on. Where is the gold? Do we have it? I mean, we still haven't heard. It's been 30 days, right? We haven't even heard anything. Wonder why. So it's
a bit unnerving, when they do that.
Yeah. I mean, no one seemingly, obviously, no one, well, not seemingly, clearly, no one really knows what's going on or what's going to happen here. And is he trying to minimize that fiscal dominance, like everyone's been talking about, and you've been outlining the last few years, and getting it more of like a Fed dominance in a way where it can be controlled there? Because obviously it's a separate entity. I mean, most people, as you and I know, most people think it's part of the government, and it's not, right? So are we trying to shift it back that way, or like what's happening in that world, or is that their strategy in a sense?
Well, I mean, like to get to kind of take control away from the Fed. Well, I mean, we saw the Fed doesn't really have total control of the market. The Fed just kind of sets the benchmark. Now, that said, the Fed does matter, because it's not just interest rates. It's also the QE and QT portion of it. The first thing they'll do is not lower interest rates. The first thing they'll do is they'll back off that $25 billion that they're letting mature off the balance sheet each month, and their current QT rate, the current QT run rate. Now, it's really more symbolic than anything that they're doing that, because it's not a lot. That's not a lot of money. But if we see any problems in the repo market, if people need dollars and there's just not liquidity there, there's a lot of liquidity got sucked out of the system going to the end of last year. We don't have there's no money in the reverse repo anymore. That was excess capital sitting in money market funds. Now they're all in T-bills, right? The money market funds still use T-bills, but they're not using the overnight repo rate anymore. So it's just a little bit less liquid. T-bills are pretty liquid, extremely liquid, but it's not as liquid as the reverse repo. So now you've got that's gone, and the bank balances are down to 3.2 trillion. And if you look at the bank balances, the Fed starts to get nervous when those balances, the reserves at the banks, when they fall down to under 10% of GDP, they start getting nervous, which is about 2.9 trillion now, right? So, I mean, GDP is about $29 trillion, maybe almost 30. So it starts getting down to $3 trillion. The Fed's going to start getting nervous that there's not enough liquidity to allow for movement of large pieces of capital within the financial system. And so we've seen this movie before, where you have a kind of a liquidity crunch, and it begins to affect the U.S. treasuries. And so that's where the Fed really steps in, where they're worried about liquidity short term for treasury auctions, or for just the treasury market in general. And so, the issue here is that as we continue down this road of, keeping the interest rates where they are, continuing the QT, and then we're coming into tax season here, April, we're going to have people selling assets to meet tax liabilities and demands. That's the question. Do we get into a liquidity crunch where the Fed feels like they have to step in and start QE again, which they did before March of 2020. They did it in the fall of 2019 because of exactly this. They had a liquidity crunch, and they need to step in and add liquidity into the markets by printing money and going in and buying treasuries themselves. That was providing liquidity to the markets. So that's the question, is when does that happen? It's not happening yet. As you can see, there's been no blinking at the Fed today.
Hold up. Over 90% of people that watch this channel don't subscribe to the channel. And we see that metric across all of Bitcoin YouTube and financial YouTube, sound money YouTube. That is crazy. Let big tech know that people want what they are getting here. They want sound money education. They want more truth. We do that by subscribing, and it also gives more resources to the content creators to provide more for you. I'm a consumer as well. I love watching this. This is why I give back. It's a calling inside, but I also learned so much over the last 15 years from YouTube that I want to give back to the community that gave so much to me. So I thank you more than you know. Please subscribe. Please subscribe to the other channels. Now, back to the episode.
Look at the NASDAQ, it's down from over 20,000 down to 17.5. So, it's down over 10% here, and 12%. And so that's been a pretty good drawdown. And so but that's all it has to do with all this uncertainty. Now, if there are a lot of people here wondering, well, okay, got all that. We've got the big picture. Is that what is driving Bitcoin down? Okay, well, Bitcoin is a particular beast, right? So last week we had the announcement of the new strategic Bitcoin reserve. And that's a big deal, and there was a really big deal, and it was an executive order signed by Trump. I actually wrote all about it in my newsletter this last weekend. But the crux of it is that the most important parts are, okay, Bitcoin they've established a strategic reserve, number one. Number two, they mandated that no more Bitcoin is sold from the government, holdings. So they're going to hodl. That's number two. Number three, they're not going to buy any more outright. There's no plan to just go and buy like 200,000 a year or $1 million or $200 billion worth or $100 billion. There's all of the possibilities that people had run through and expected something announced about how much they're going to buy, when, how they're going to do it. Well, that was all tabled. And they said, we're not out there buying any right now. That's just not in the plan. And so because of that, the market sold off. Now, before I go any further, they did say that they would buy Bitcoin if it was budget neutral, meaning if it didn't require tax dollars to go out there and buy them. So if they could use something else in the budget, something else on the balance sheet to sell and offset that the cost of buying more Bitcoin, then they're looking at things to do there. Well, what would they do there? Why would they do that? Well, they could do things like they could sell some of the stockpile, the digital asset stockpile that they also announced at the same time. And that is the different cryptocurrencies that are seized from law enforcement, the government entities, when there's some sort of illegal or illicit activity. Things like Solana and Ethereum and XRP from illegal activities, they'll take those and they'll put that into what's called the digital asset stockpile. But they're not planning on buying any of those either. And there's no plan to buy those at all. There's no plan to buy those in a budget neutral instance. It's just there's no plan at all to buy those. So it would make sense to me that that's the first place that they would go to kind of seize those, have that stockpile, maybe sell those off and buy Bitcoin with it at some point. I don't know when or how or whatever. They could sell other things, they could sell gold, they could sell land, they could sell cheese, whatever they want. According to this, they could sell oil. I don't think they're going to do any of that. That would be budget neutral, but I don't see that. So I could see them doing other things and figuring out other ways to buy it, budget neutral, but still that disappointed the market because there was no announcement that, we're going to go buy $100 billion on an executive order. Just like the Gold Act, we're just going to go and put it in a strategic reserve because it's important to have on our balance sheet. They're not doing that. They're also not going to just say we're going to buy 200,000 Bitcoin a year, like Senator Lummis's bill, the Bitcoin Act says. Is that possible to still happen to get the Bitcoin Act passed? Maybe. I mean, I don't know what their plan is there. But the reality is that right now it disappointed the market. Why did it disappoint the market? Because we didn't get that plan to buy a bunch more. So the price of Bitcoin, while the whole market is rolling over, while it's already reached all-time highs and had that euphoria of the Trump impact of the new administration, a positive administration, you've got the ETFs, you got the ETF options, you've got SAB 121 repeal. We're going to talk about that. You've got the gap accounting rule change. Now you've got the ending of choke point 2.0, hopefully soon. I still have seen some things in my hedge fund that suggest it's still happening, but hopefully that ceases very soon. And regulation around all this, regulation around stable coins, regulation around which of these cryptocurrencies are deemed tokens and which are deemed assets and all of that stuff. Like Bitcoin is the only one that right now is deemed as a commodity. So really, really important to have that clarity. So those are all tailwinds for Bitcoin. So why is it selling off? Well, it reached an all-time high. It hit that $100,000 mental level, and it stayed up there for a little while, and then it sold off. And once it broke back through 100,000, now that becomes a resistance level. And so it's a mental level, it's a major mental level. You had a lot of from what I understand, there are a lot of OGs that have sold around the $100,000 level. They've been holding on to this thing forever, and they've made massive, massive, massive amounts of wealth in US dollar terms that they can go and turn around and use to buy other assets like, houses or planes or boats or whatever they're going to do. And so they're cashing in. They're going to go enjoy some of that they held on for so long. And that's what appears to be happening from what I know. So, however, still price-wise, why would it sell off from 90-something thousand down all the way down to 80,000 from after the news that the strategic Bitcoin reserve was established? In the price of Bitcoin, clearly there was an event-driven trade going on where you had short-term investors looking for this to pop, meaning Bitcoin to run back over 100,000, go to 120, 150, whatever they had calculated in. And they expected that to happen if and when a strategic Bitcoin reserve was announced, along with a purchase plan. But the purchase plan wasn't announced. So whatever amount that they had mathematically factored into the price of Bitcoin had to be taken back out. So just to keep everything simple, if Bitcoin's at $100,000 and these momentum players thought that it could trade to $150,000 if the Bitcoin reserve is announced with purchases, then that's a $50,000 move. Okay. Well, if they figure, well, let's just say it's 80,000, it's trading at 90,000 because that's where it was. That, in that $90,000 is the probability that that price would go to $150,000, whatever that probability is, 25%, 30%, 50%, whatever it is. Well, that is telling you that if it was trading at $90,000, that there was a 50% probability priced in that it would trade back to 100 at least, right? Because 50% probability of a trade to 110, let's say, 50% probability would mean that the price should be about $100,000 that's expected to go to. Well, it didn't. So you've got to extract that back out of the price. You got to extract that probability that's embedded in that $90,000 price out. And so that takes it back down by that amount. So that's the problem, is that was in the price and now it's being taken out at the same time, Brandon, that you've got all this uncertainty going on. And Bitcoin has acted like the leading risk indicator for a long time now. Whether or not it should be, whether or not that we believe it is, it's what the market believes. And the market believes that it's a risk asset right now. And so it's going to treat it like that. And so when people get margin calls, they sell it. They sell this along with other risk assets that give them liquidity, especially over the weekend. When you come into a week that you expect, some downside volatility in the market, what are you going to sell? Well, the only thing you can sell is Bitcoin because it trades 24/7. And so they're able to do that. So that's a long-winded answer of why Bitcoin traded down, but the simplified version is, well, embedded in the price of Bitcoin last week was the probability that this Bitcoin reserve would be announced with some sort of buying strategy. It wasn't, so that had to be extracted from the price, and here we are.
So, final thing here, MicroStrategy, strategy and Sailor, and just, what's going on there. They're obviously down as well, leverage play on Bitcoin. I would love for you to just unpack your thoughts on strategy and Sailor seemingly trying to become the biggest Bitcoin bank in the world. I would love your thoughts on this.
Yeah. Michael's done a masterful job of figuring out a way to do what you said before. Borrow in a debasing currency and buy an appreciating asset. And he's done that with the balance sheet of MicroStrategy. He's found a way to do it he's basically monetized volatility. And what I mean by that is that he's found a way to borrow money for free because of buying the Bitcoin and putting it on his balance sheet. It created volatility. All right. So that volatility is valuable to the buyers of those bonds. Why? Because they're convertible. And so when you buy a convertible bond, you want volatility because that gives optionality upside, and it creates value in that bond because you have the ability to, number one, trade around it because it's a convertible bond. You can short stock against it in what's called the delta neutral strategy or delta hedging strategy. It doesn't have to be neutral, just delta hedging strategy, where you're selling an amount of stock that is commensurate with that convertible bond. So you can trade around it. If the stock goes up, you short more. If the stock comes in, you cover it. Goes up, you short more. Comes in, you cover it. That volatility gives you the ability to make money while you're just holding this bond. That's why you don't need a yield on it. The second thing that makes it valuable is that volatility to the upside, where Bitcoin is very volatile and a rising asset. These bonds get converted into underlying common, at a price that is then in the money. So then you're making money off of that because you got to convert it at a price that is lower than the price of the common stock. And that has happened for some of these bondholders. And so now you've got MicroStrategy has 500,000 Bitcoin, 499,000 and change. And Michael Saylor has stated that he wants to get to about a million Bitcoin. So right now he owns 2.5% of the float of Bitcoin, the supply, and he wants to get to the point where he owns about 5%. And so, which would be a million. And so, and his stock is trading around that. Okay. So as he's buying, he's created a situation where people expect him to keep adding Bitcoin to the balance sheet, which makes that stock more valuable. And so they attach a multiple to it. And they have attached a multiple as high as 2.5 of common to the underlying value of Bitcoin. What do I mean by that? Well, if you take all the shares, all the common shares, and then you take all of those convertible bonds and you convert, and you treat them as if they've been converted. So you fully dilute the share count. You take all those shares, you multiply it by that share price, and you divide it by the amount of Bitcoin that they have. That's your multiple. So you divide it by the amount of dollar value of Bitcoin they have. So, right now they've got just under $40 billion of Bitcoin, and the stock is trading at about $7 billion valuation fully diluted. So that 1.8 times multiple to that fully diluted basis. It's a little bit lower than it had been. It got up to 2.3, 2.5 for a minute there, and it's backed off. But this is the key. When MicroStrategy borrows money and they go out and buy Bitcoin with it, it's accretive to the stock because of that multiple, because the stock remains the same price or close to it on a multiple basis, then that means the stock is going up. So that's the key, is that they found a way to do that. Is it dangerous to the downside? I mean, Bitcoin would have to drop. I mean, the only way that it gets to be problematic is if Bitcoin drops so low that they don't have enough Bitcoin to pay off a note that's going to mature. And Bitcoin would have to almost go to zero for that to happen. So I'm not concerned about that at all. And reality is they could likely just borrow more money, in order to pay off that note, because of the volatility. So not really a big concern. Don't think that they have risk of blowing up. And I do think that his strategy, his vision is to create the largest Bitcoin financial company in the world. It will be like the JP Morgan of Bitcoin, where they have got all kinds of products that they've created around all this Bitcoin that they have, 1 million Bitcoin they can use for all kinds of products, collateralized products, lending products, whatever it may be that they want to do. They'll have control of that, where other companies will just not, they'll never get to that size. And so they've got that ability.
All right, last words. Thank you so much for coming on today, brother. Bitcoin Opportunity Fund, I'd love for you to just touch on that quick, and your newsletter, which is amazing, The Informationist. So please tell us about that for a second.
Yeah, so the Bitcoin Opportunity Fund is the hedge fund that I co-manage with David Foley, and we make investments in the Bitcoin universe, in the Bitcoin space, the public and private investment fund, and we kind of manage the money the way we would manage our own money. The difference is we can do private deals. We have most of our portfolios in public stocks and public situations, but we can do private deals. We don't do a ton of early stage stuff, just a few here and there. We're really more interested in more developed companies. So our kind of our core, the difference between us and the VCs is our core focus is more mature companies that have, real companies, real revenue, real profits. And so that's what we're mostly focused on. And that's where, we've made some of our best returns. I think that this space it's got a lot of VC in it. There's nothing wrong with that. It's just that, it's a long development curve for the like duration for those investments. And, these funds, if they're 7 to 10 years, they may need to extend or open up new funds in order to get the benefit of that long duration asset. Our assets have a much shorter duration. So we're looking at something, the bulk of ours are more in the 3 to 5 years. So, and some of them even shorter. And the other thing we do is we hedge portfolio risks. So we can isolate what we're trying to do by shorting stuff that we don't want to have, short some of that, just general market risk. We can short some of that out, which is helpful. So does it remove all volatility? No, but it does help. And, we just actually, Brandon, we just launched Fund 2, which because you heard me on the phone dealing with some operational stuff. But we just launched Fund 2, and it's just like Fund 1. And we're investing the same exact way. The fund will invest the same, together. So just pro rata to how much money they have in each fund. The only difference is Fund 2 remains open, and it's going to remain open. So if when we do our private equity investments, which we've got a few kind of lined up here, once we do those, and if you're not in the fund before that, you can't. Those are side pocketed. So later investors don't have access to those. It's just you have to do that because it wouldn't be fair. To the early investors, to have dilution of those assets later. So, but we're excited. Like I said, a lot of opportunity out there. And then, of course, the information. This is the newsletter I write every Saturday. It comes out every Sunday, and it just takes one of these topics that we talked about today, like that kind of stuff, and it simplifies it for people. It's got a lot of readers. I'm excited about that. I love doing it. It's kind of a passion project thing, and at this point, it's got 40,000 subscribers, and it just keeps growing. I love it. So if you're out there and you want to kind of learn this stuff in a more simplified manner and a bite-sized, newsletter, well, it's called The Informationist, and it's on Substack. So.
Yeah, it's a great letter, and I can attest to that. Yours, Lynn's, there's a couple of really good newsletters out there. I know, Sam, I think writes a lot of Natalie's now, and they help each other. That's a great one too. So there's a couple of really good ones. I've been on your list for a while, so awesome. Really very good. And James is also James Bond in Series 3 Bitcoin trading cards. So I unfortunately don't have mine yet. So because they just came out a few weeks ago, but awesome. It's an awesome card. So
that's so much fun. I appreciate you guys doing that.
Yeah,
super fun. It's awesome.
So cool. So thanks for being here. And thank you for joining us today, being a playable character in a sea of non-playable characters. We know we need many more of them. So thank you, James. Appreciate it.
Of course. Thank you for having me, Brandon. And I look forward to the next time.
If you love this interview we just did with James Lavish, you are going to love the one we just did with fighter pilot and Top Gun graduate George Bodine, or you're going to love the one we just did with Rajat Soni. You're not going to want to miss that here. Check those out. Can't wait to see you inside.